Where to invest your money for long-term growth? When we look at the investing legends around the globe and even in India, people like Warren Buffett, Mark Cuban, Rakesh Jhunjhunwala, Mukesh Ambani and so on. These people didn't accumulate wealth overnight, and this is what every investor in India fails to understand. Yes, those short-term hikes in dividends can be fun to play with, but remember, if you have objectives like education, family planning and various future perspectives, then long-term growth is what you need to go with. This is the reason we have put this video together for you guys. Because long-term investment ही asal profit है. In this video, we're gonna come up with great investing ideas for long-term growth in the share market. What is long-term investing? Long-term investing is a popular investing strategy that is employed by many to grow their money exponentially in the course of some 5, 10 or even 15 years. And if you're really into share market investing, you already know about Benjamin Graham, the father of the value investing strategy. And he had defined intelligence as not trying to time the market by investing based on sheer luck, but rather spend some time in the market. And astonishingly, this is something which is extremely rare in India, which explains the pain of most of those broke investors. Now, there are plenty of advantages that come with investing for the long term. The short-term investment goals might sound very attractive for some beginner investors, but the chances of success are very thin. With long-term investing, you get to utilize the perks of compounding, and it can also help you guys in maintaining a diversified portfolio. Here's a list of some stocks which are made for long-term investors. Number 1. Kaplan Point Labs. The Indian pharmaceuticals market is in a good space and has the characteristic that makes it unique. Firstly, branded generics dominate this, making up for 70 to 80% of the retail market. Secondly, local players have enjoyed a dominant position driven by formulation development capabilities and early investments. Third, price levels are now low, driven by intense competition. While India ranks 10th globally in terms of value, it is ranked 3rd in volumes. Kaplan Point has delivered a 5-year average ROE of 29.4% over 2018 to 2022, which is strong among peers. Industry average ROE stands at 23%, while the 5-year average ROCE stands at 37.2% for the same period. On valuations, the company trades at a PE ratio of 19.3x, which values it attractively given the industry average. PE currently stands at 25x. On risks, the pharma business involves high amounts of regulation, and changes in such regulations can impact their business and in turn profitability. Another risk factor is regarding discovery of new solutions. While Kaplan Point has a high R&D sales ratio, it might not be able to generate a new solution and may lose out to some competitors. Accordingly, investors should be cautious and closely monitor these factors. Number 2. MPHRSys. Yes, you guessed it right. We are talking about long-term stocks, and how can we even forget about the IT sector? The IT sector is one of the most crucial sectors of the Indian industry, as well as one of the largest drivers of export revenue for the country. The industry currently contributes to about 7.7% of GDP and is expected to contribute to about 10% by 2025. MPHRSys has a strong portfolio of cloud-based solutions, machine learning capabilities, blockchain solutions, and IoT, Internet of Things, among others, which enables it to provide tech solutions for future technologies. Now, let's talk about some straight facts. The company has seen strong growth in profits at 12.3% CAGR over the past 5 years, while delivering a 5-year average ROE of 19.4%. This is immense as compared to the performance of other IT companies hanging around. Number 3. APL Apollo Tubes. Now, stepping into some infrastructure, it is actually the general term for basic physical systems of a business, region or nation. For instance, transportation systems, communication networks, sewage, water, and electric systems are examples of infrastructure. APL Apollo stands to benefit as the country sees growth in infrastructure development, and it provides steel tubes and pipes which are critical to building infrastructure. The company is currently the largest supplier of galvanized pipes in India. APL has strong financials with a 5-year average ROE of 23% and ROCE of 25.8% over the same period. The company has delivered an average 5-year net profit growth of 29.7% CAGR, while revenues grew at 27.2% in the same period, delivering strong growth momentum. It also has a low debt equity ratio of 0.26x, down from 0.54x in FY20. On valuations, it trades at a PE of 42.3x, which is decent given the strong pace of growth. Number 4. POLYCAP India. Starting off with the manufacture of copper wires and later diversified into high-margin FMEG, fast-moving electronic goods, such as fans, lights and luminaries, and other consumer electronics. The company has major growth opportunities as the country sees development of infrastructure and as electricity distribution and consumption grows in India. Another trend that has been rampant is the consolidation of copper manufacturers moving from unorganized to organized players, thereby allowing POLYCAP to increase its market share and market size as well. When we talk about market leaders, POLYCAP is right up there. With a market share of nearly 20 to 22% in the fiscal year of 2021, POLYCAP has been offering some serious long-term prospects for its investors. Talking about returns, it has offered a strong 5-year average ROE of 19.2% and a ROCE of 25%, and according to certain predictions, these figures may shoot in the coming years. Trading currently at a PE of 38.4, the company has strong growth prospects. Number 5. Tata Consultancy Services, TCS. You might have guessed this one. Listed in the National Stock Exchange, if you had invested in TCS, let's say in 2017, you would have made returns of more than 180%. Over half a decade, Tata Consultancy Services managed to grow its earnings per share at 10% a year. This EPS growth is slower than the share price growth of 21% per year over the same period. So, it's fair to assume the market has a higher opinion of the business than it did 5 years ago. And that's hardly shocking, given the track record of growth. Tata Consultancy Services is a leading company in the IT industry. It is the second biggest Indian company by market cap since it is valued at over $136 billion. The only bigger company is Reliance Industry, which is valued at over $196 billion. The combination of all companies of Adani Group is also bigger. Tata Consultancy is mostly owned by Tata Sons, who hold about 70% of the company. They also own other firms like Tata Teleservices and Tata Motors. Other big holders are Life Insurance Corporation of India, SBI Mutual Fund, and Axis Mutual Fund. The TCS share price was in the spotlight on Monday as investors focused on the company's earnings. Analysts expect the company will post a 7.2% increase in net profit even as business remained under pressure. If this happens, the company's profit will be more than $1.26 billion. At the same time, analysts expect the company's revenue rose by between 3% and 4.6% on constant currency terms. So, if you're one who wants to play slow, but plays it big like Virat Kohli, then you need your money invested in TCS for long-term growth. Number 6. ITC Limited. ITC is engaged in multiple consumer businesses ranging from cigarettes to food products and stationery. The company generates about 46.4% of its revenues from cigarette sales and has the highest market share in cigarettes, 84% market share. The cigarette market has growth opportunities as the market moves from unorganized to organized segment, which will result in market consolidation and huge market share gains for ITC. The organized tobacco market at just 10%, indicating the immense growth opportunities in the segment. The company has delivered strong operational performance over the years with consistent profit and revenue growth of 8.36% and 7.87% CAGR over the past 5 years, and have delivered a 5-year average ROE of 23.2% and ROCE of 32.7% over the same period. It also offers investors an attractive dividend yield of 4.26%, but there are some important factors to consider. The company faces risks from regulation from the cigarette industry, which can impact the pricing power for ITC, impacting revenues and growth. Another risk is from competitors as the industry sees intense competition. Hence, the company needs to be very proactive with their strategy. So that was all for today. What do you think about these investing ideas for long-term growth? And furthermore, how are you planning to diversify your portfolio in the best possible way? Are these stocks on your list yet? Let us know in the comment section below. Make sure you press the like and subscribe button, and we'll see you guys in the next video.